October. I can't believe it's already here. So we're down to the last quarter of 2024. I think you're going to find this video really helpful, although I am going to try to make this one a little bit shorter than I did last month just to get through this data a little quicker. So before we get into what the stats are, everyone's been asking me, what I think is going to happen over the next 3 months, 6 months, and obviously deep into 2025. So here's my prediction for what it's worth, even though I don't have the crystal ball either, but I do have my hand on the pulse of real estate because I've been doing this for 25 years and I've watched how these markets shift. And there's no question that we've had a shift. I mean, we peaked in late May of this year. That is when the demand started to fall apart a little bit more, or soften, I should say, is probably a better word. And we've noticed that inventory has started to increase. I will tell you right now, this is pretty normal because these red hot markets, they can never last for a long time. It's just not sustainable. Pushing the first time buyers to get into the market on price, and the market has to take a bit of a breather. And that's really what's happening right now. Now, there's no question, all of you have been probably watching the news. You're probably paying attention to what is going on with inflation and interest rates. We all know that that plays a very, very crucial role in real estate. And, we've hit that threshold now of 2% inflation. And now suddenly the government and Bank of Canada are saying, hey, we're going to have to lower these rates and let's re-stimulate the economy. A lot of people have been feeling like that's going to really help Calgary. So this is my prediction. I think we're probably going to remain relatively flat for at least the next 6 months. I think the fact that we have a big election coming up in the U.S., people like to put off big decisions when they feel like there's certain things that are uncertain. And of course, we don't know what will happen with that election, on what degree that will affect Canada. The fact that, the market is taking a bit of a breather. You've got buyers now asking themselves, is this really a good time to buy? And when you give enough people questioning whether it's a good time to buy, you're going to find that people will put things on hold. Now, here's what I also think is going to happen. If rates come down just a little bit more, let's say we get into, 3.5%, 3.7%, somewhere in there. So if you do the math very carefully, you're going to notice the last 2 years, we have raised the rents substantially in Calgary. They've gone up at a higher rapid pace than we've seen in the last 20 years, in the last, I'll say 2 to 3 years. And part of that has been there's been enough demand, but the other part of it has been interest rates have forced people who own investment property to have to raise the rate because their mortgage payments went up when they are either on a variable rate or their mortgage came up for renewal. And for many investors, it just didn't make sense. So that's all fine and dandy. They got the rent, and you have these people now that are renting. Well, what's going to happen is all of a sudden, when we hit into the 3 percentile for interest rates, we'll probably hit that, I'm going to say sometime next year, maybe around the summer. A lot of these people that are renting are going to look at it and go, hey, you know what? I'm just doing a calculation and I can actually own for cheaper than I'm paying in rent. And that is going to be a shift. And I can tell you, I've seen this before. When rent and owning are the same, or it's cheaper to own, it will just bring a lot of people that are in a position who have a down payment, who qualify, and they will get into the market. And I think we might see a relatively strong market starting in the summer of 2025. So it'll be a little reverse to what we saw this year. We came into 2024 really strong, and then it just, softened at the end of May. I think it's going to stay relatively a balanced market. But when all of a sudden those interest rates hit that amount, like I said, where owning is going to be cheaper, you're going to see a lot of people hit the market. So that's my prediction. So the good news is it does look good for Calgary regardless. Now, let me wrap up by saying this before we get into the stats. If you're looking to buy a property, some of you who are watching this video might be thinking, well, I should just wait for a lower interest rates before I buy. Well, I'm not saying don't do that. I'm just saying that you could also potentially pick up a really good property between now and the spring. Prices are going to probably stay relatively flat. There's going to be some good inventory to choose from. And you could also take a maybe a 1 year fixed, or take the variable, maybe some short-term pain on the interest rate for the long-term gain on locking in when the rates come down, or even maybe just take a 3 year, because I understand even 3 years right now are in the low fours. So there's some deals out there on interest rates too. So don't forget that. But you can find yourself a pretty good property if you know where to find them. I know we're doing a lot even right now with off-market listings, and if you're interested in that, you should reach out to me on that. But there's definitely going to be some value, and you're probably going to find a few motivated people for whatever reason. Some people are there's always those divorces, there's always those estate sales, there's always some people that are in trouble financially, and those opportunities do come up. So I'm just saying, if you're in the game and you're looking hard and you're working with someone who knows how to find these properties, you could find a really good deal between now and the spring. Now let's talk quickly about sellers. Because if you might be thinking, well, is this really a good time to sell now that the market's a little bit flat? Well, yeah, I mean, obviously it's not as hot as it was, and so you have to lower your expectations. But here's the thing. Last spring, you could have like a house that needed some painting, or maybe your flooring wasn't in the best of shape. And sure, you could just get it on the market and you could still sell it, and sell it relatively quick. There was such low inventory and high demand, buyers were willing to overlook some of that stuff. Well, now that there's higher levels of inventory, you have to pay a little bit more attention to your house. So we're really moved back into getting your home ready for sale and paying attention to the details. Take it from me, I've been through balanced markets many times in my career. If you do all the little things right, and I have a great program for that, of just getting the house ready to be sold, you can still maximize the sale price. If you look around at the inventory right now, there's a lot of inventory that's not what I would consider to be great value. There's some properties that are on the market. I was just showing some to a buyer recently, and I couldn't believe how little effort was put into getting these houses ready to be put on the market. And a little bit of effort of painting, flooring, fixing the fence, cleaning it up, oh man, does that ever go a long way, and you can still really maximize the sale price. So consider that. And that's just something that I know I do, because whenever I come over to people's homes, I spend more time on giving them advice on what they need to do to prepare this home for sale than just talking about the price itself. All right, so let's get into talking about the stats now. So here's a good snapshot of the city. This is the median sale price if you include condominium. Okay, this is the entire market, so you can get a sense of every quadrant of the city. Well, I mean, we got it into 8 different sections now. The highest price is still, of course, in the west at $723, but it's quite amazing when you look at these numbers. This even the northeast is up 9.5%, and the east is up 13%. And city center just stayed, relatively flat at 2.3%. Now, as we come down here, here's the hard numbers. All right. So you can see what's happened September of 2023 right here. We were at 2,430 sales. We only did 2,003 sales. That's a 17.57% drop from September 23 to September 24. And you might look at that and go, oh man, that's not good. Well, it's not good. However, put it in a perspective, that is a pretty normal September for Calgary. It really is. 2,100 sales, that's really, really normal. So really nothing to panic about. New listing inventory. So 3,600 listings came on. That's a 15% increase. Here's the big one though. We're up 49.69% in inventory. We got 5,064. And again, that's getting back to normal levels. Like when we were 3,383, that is way too low of inventory for a market like Calgary. That's what pushes prices too quickly. And it's good to see, like, this is a healthy number. We're hitting a more balanced market. Having 2.5 months supply of inventory, that's actually pretty good. So I'm liking to see these numbers. And look at this, we're still at 99.14% sales to list price on average. So for the people that are selling, if you've got your house priced where it should be, you really shouldn't have to move too much off of that. However, I have noticed there's been some people that have really tried to push the envelope and asked for a ridiculous price. Even the other day I went on a listing appointment and I was shocked to see that a couple of realtors had valued the house for about $100,000 more than it that should. I mean, when you got clearly 3 houses that are pretty much identical that just recently sold for, you know, $100,000 less. I don't know where they got that number. So you do see some of that, but if it's priced where it should be, 99% of the asking price is really doable. So our median price or benchmark price came in at $596. And, you know, that's up 5.53%. That's including condominiums. Now here's the chart that just gives you a good idea of what it's looking like. And you can see in blue here, the inventory is rising. And you can see right now when you've got inventory rising, you're not going to see these big gains that you see in red when it comes to the raising of the price. But again, we're just getting back to more normal level. So these are the detached homes, 40.67%. You can see we're right in the balanced market. I mean, look at earlier this year, we were deep into a seller's market where, you know, 70-80% of the inventory was selling. So as I mentioned earlier in this video, at 40.67, that's good. It's a healthy market, but you're going to have to be smart if you're going to sell your house right now. Our benchmark price for the month was $757,100. We're at $748 for the entire year. But if you take September, you know, last year, we're up 8.76% in price. That's pretty strong. And I don't think we're going to see anything like that between now and next summer. That's a pretty significant gain. So there's the hard numbers, 942 out of 2,316. So like I said, when you see those numbers, you can see that a lot of people didn't sell their house in September. And you have to ask yourself, when you're in a market like this, what do you have to do to sell? How do you have to be one of the 942? That's why you have to be smart about it, and you got to have doing everything correctly. Now, market distribution, I always love this chart. You can see 600 to 700,000, that is the most popular price for a detached house. And you can see that 700 to 800,000 is slowly creeping up. But I think that this is going to stay relatively the same for the next 6 months. That luxury market has been phenomenal. I mean, look at the fact that we've had 9.53% of the market is $1 million to $1.5 million. You know, that's pretty significant. And to even see, you know, $1.5 million to $2 million at 2.49%. It's actually amazing how many luxury homes are selling. I've never seen the luxury market to be this strong in Calgary before. Okay, in the interest of time, I'm going to go right into row houses. I'm going to not do semi-detached on this video. Row houses, a little bit stronger. And it makes sense. I mean, look at the benchmark price, $459,000. That's very affordable for most people. So we're still touching on a seller's market right around 50%. Very, very strong, because a lot of people like these townhouses. They're great for investment property, for rentals. They're also fantastic for buying your first property, people who get divorced, even people who are downsizing. They love these townhouses. You can see for the whole year, we're at 452 for the benchmark price. So that's just slightly higher than the entire year so far. 377 out of 747. So that's a pretty darn strong market. 25 days to for them to sell. And of course, 400 to 500. That's the sweet spot for these properties. And I can tell you, even in this market, yeah, when a good one comes up, it's priced where it should be, and it's in great shape, good location, man, you can sell these still in a day. I've got a number of investors that are always looking for these. So the apartment condo market right here, this is definitely really slowed down. I mean, look at one point in March of this year, we were, you know, pushing 90% absorption rate. Now we're back at 30.93%. So this condo market has significantly changed really quickly. And that's, again, not a big surprise, because when the market shifts, the condo market is affected, you know, quickly. It's just how things are, and primarily because there is a lot of condos to choose from. We have more inventory there than we do on detached houses, so that's always going to be a factor. But $345,000 is our benchmark price, and that's up significantly though, 13.86%. But you're not going to see that in the next 12 months. There's no way. 353 is year to date, so it's a little bit better. Actually, I should say 335. I was reading that wrong. year to date, so slightly lower than the month of 345. Here's the hard numbers, 502 out of 1623. And that's a perfect example now of seeing that the market is softening. There's less demand. You've got a little higher level of inventory than we did. So if you have a condo right now and you want to sell it, you're going to have to be priced bang on. And if you're a buyer looking for a condo, this is a great time to be looking at some sellers who are potentially motivated. So there's opportunities always for both buyers and sellers, again, if you're smart about it. And you can see right here, 300 to 400,000, highest demand, 42.44% of the market. So that gives you a good idea of what's going on. I hope this has really been helpful. And as always, just reach out to me if you've got questions. Even if you're not looking at doing anything right away, it's all right. I'm a big believer in no matter where you're at in your process of buying or selling, it's good to talk to someone like me, because I can give you some direction and really narrow things down a lot better for your particular property as to what would be the right course of action to take. See you all next month.